Dear viewers, this is our Tuesday's Expert Speaks program. I have brought an expert to this program today, our ACE fund manager, Harini Dedia. What is the topic that we are going to discuss today? We have seen nothing is happening in the stock market. It has become a boring place. Markets are not crashing down, markets are not moving up, investors are worried, investors are frustrated, and they are questioning, is it really possible to make money in the stock market? Harini Dedia is going to talk to you about the secrets of making money using this phase of the market. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to give you the perspectives of what exactly is happening in the stock market, why stock market has become a lackluster place, why there are no returns, should investors really exit the stock market, should they stay invested, is there a similar phase which has any time happened in the stock market? To talk to you about all these things and more important, the secrets of making money during this phase of the market, I have called to this program the ACE fund manager, Harini Dedia. Harini Dedia has appeared on my channel multiple number of times. She is a research analyst. She is a fund manager. She works with Tamohara, a boutique PMS firm. She started her career way back in New York. She studied in New York and she started her career with a hedge fund. In India, she has earlier worked with Truffle Investments with Ghalla Bansali stockbrokers. Her funds, which she has managed under PMS, have drawn attention of CRISIL and PMS Bazaar, and they have got the star ratings. Welcome to the show, Harini Dedia.
Thank you so much, Dr. Bhatt, for the very kind introduction again and for having me on your show again.
Harini, my investors are frustrated. Why say my investor? Every investor in the stock market across globe are a frustrated lot. They have lost hope. They are telling the bank FD rates are far better. There is more money to be made in the fixed income. Stock market is not showing any signs of a bull market revival. What exactly is happening, Harini, in the stock market?
So this is actually a very pertinent topic that's been plaguing us included, because we are, at the end of the day, we are also human beings and we also go through the same emotions as everybody else. What we are seeing in this market right now is a very classical definition of what we call a time correction. So let me take a step backwards and talk to you about what exactly are market corrections, right? And there are two buckets, if I may, of market corrections. One is price correction, and then a price correction is when you see those steep falls happening in the market, right? Where there is typically some negative news and the sellers are far more convinced than the buyers, right? So in the markets, for a trade to be executed, there has to be a buyer and a seller. But when the sellers are far more convinced, you have price corrections. On the other hand, what we're seeing right now is a time correction where markets have been range bound. So it's plus 10, minus 10, but overall it's not making a new high, it's not making a new low, it's just staying pretty much where it is because there is typically no new information. And if you think about it, the last wonderful piece of news that we heard really was the success of India's vaccination drive and the opening of the economy as a result of that success. But post that, we've had Ukraine-Russia war, which people thought was going to become a global issue, but then remained an isolated issue because nobody wanted to interfere there. But globally, there has been not any significant news flow, right? I mean, honestly, when movie collections and IPL are making headline news, you know that people don't really have anything to talk about. So here, the buyers are not convinced, the sellers are not convinced. So you have a time correction. So everybody comes every day and they do their basic minimum work, but they're not able to sort of take a very, very strong call either way. I think one way to think about what kind of correction we are going through is also how our own physiology reacts to this, right? When it comes, in Hindi we say dhak dhak hone laga, right? So when it comes to the matter of the heart, when you feel that anxiety, you are typically in a price correction, right? Because you see those steep falls and you get a pit in your stomach. So that's the matter of the heart. Time correction is a matter of the mind, really, right? Because you're bored. You're completely bored out of your wits because nothing is happening. So that's, another way to really define corrections is how your body seems to be reacting to it. And what we are seeing right now is exactly that. We are seeing a matter of the mind play out. We're completely bored because nobody's taking a stand, because nothing new, no new information that's coming out, where either buyer or seller is getting excited. I think that's where we are at right now.
So probably after hearing you, I get a feeling that we all talk about emotions in the stock market. The only time where there are no emotions in the stock market is the time when there are time corrections are happening. You are neither fearful because markets are not falling down. You are not excited or greedy because markets are not moving up. So it's in a static state. Probably this is the only phase where markets are not acted upon by emotions, by the volume of investors. Probably is that the right way to put it?
Correct, absolutely. So on an aggregate, I think that is what is happening. Though I'll give a caveat here, right? I think these two things can exist simultaneously in different segments, right? So let's say you were somebody who invested all your money in either gold or in capital goods. For you, you are greedy. You are experiencing the biggest highs of your life. If you've invested money in the index fund, you are like us, pretty bored. And God forbid if you've invested in NASDAQ or US tech, I mean, you faced anxiety. So, within this period also, there are different people have faced it differently. But on an aggregate level, I think boredom is what we are seeing across the place right now.
Harini, you gave me two terminologies now, a price correction, which is happening where the sellers are more convinced that there is going to be a lot of negative news because of which markets have to go down, and a time correction where people feel that there is no excitement on upside or on the downside. A follow-up question to you is, a time correction would take time. That's the way we look at it. But is it possible to time the time correction? What I mean to say is, let's say that, okay, markets have corrected and we are passing through a time correction phase. So I will enter market at a particular point of time than staying invested. Is that possible? And as a research analyst and a fund manager, what is that message you want to give it to the investing community?
Honestly, if you could all time it precisely, we would all, at least I would be a shade richer than I am. So it's not possible to time it precisely because markets essentially give you aggregate of the human emotion at that particular point in time, right? So, and emotion is governed by social sciences, right? And social sciences are not precise. So we don't have precision, but where we lack for precision, we have heuristics, right? Some signs that can give us an indication of the direction. And and Mark Twain also said it, but we also say it. So we'll also claim partial ownership of this idea that history seldom repeats, but it often rhymes, right? And this, from a market perspective, can be a great tool for helping us form a guideline, a framework as to how to navigate time corrections, right? So from a market perspective, if I have to look at things, typically when the valuations of the aggregate market in India start hitting 28, 30 times earnings, you are pretty much, at the peak of, the bullishness. You've bought in too much into the story, right? So to speak. So you should expect some correction. Now, if there is no news, you will have a time correction. If there is some really adverse news, there's leverage in the system and somebody goes bust and some major group faces trouble, all of that, then you will see a price correction. But otherwise, you typically end up seeing a time correction. So, and this we've seen across time. So, be it the peak of 2008, where we saw, the great financial crisis precipitate. That time also it was about 30, 32 times. In the 17, 18 peak, when post the budget that was presented, where long-term capital gains was reintroduced, we saw a correction happen. Market was already at about 26, 28 times. And even, recently when the time correction started, markets had reached about, 28, 30 times earnings. So, when you start crossing the 28 times, you should know that whatever you are in for now is complete greed. There is no sanity that's prevailing. But here's the funny bit, right? The funny bit is that markets will tempt you at that point of time because every day will be so exciting and there'll be such great news flourishing all around you. So that's where it gets really tricky. But we've seen from a market perspective, valuation plays a very, very great tool tool to sort of help you gauge that you're getting into dangerous waters now. And I think there are some other things that you can observe around you. So in my case, when my grandmother starts asking me about Sensex and Nifty, I know it's time to, take a step back. I know it's time to not be aggressive now, because if she's interested in this topic, for me, that's the threshold, right? Because otherwise she's only concerned about what fruits am I eating and what Indian mithai she can make for me. So for me, that's a very good barrier. So we all have these, people in our lives who have nothing to do with the markets for most of the time. When they start talking to you about the markets, be careful. The other great test I've seen is what is popularly called the magazine cover test, right? So if you remember, in the month of October, November, in 2022 itself, we saw a lot of these international publications sort of say India the only bastion for growth globally. And it became cover news, right? The Economist ran a cover on India, which it never does in a positive light. But this was a positive cover that the Economist ran on India. And precisely the next month onwards, US outperformed India. I mean, it gets so exact because what has happened is, I feel that once the magazines are printing it, right, it's the last person, international publication printing a cover positively on India. So like the last person is also convinced. Then there's nobody else left to convince. So, where is the last? If the last buyer is also in the market, then who else is going to come and buy the market? So that's also typically a very, very good sign that, you're going to be in a correction mode for some time. So you do have markets giving you clues, and then you'll have people around you and, your common day publications and newspapers and magazines also giving you clues. So that's probably something you can use to time a time correction, so to speak.
Oh, you mean to say you're in a bull run and you look out for these signs around you, what's happening, who is talking about the stock market, overall frenzy in the retail investing crowd, people who normally do not talk about the stock market start talking about the stock market. It becomes a party time talk and everybody starts boasting of the amount of money they made. That's the time to walk out of the market. But we are in the middle of the time correction right now. What happens during this time, and how investors should handle this period? This is a period where nobody is interested, nobody is talking about it. It is something, as you said, boredom is striking everyone. What should the investors do? Should they wait for the adrenaline to pick up to come back and enter the market, or what should they do now?
So I think easier said than done, but I think my number one advice would be stay the course, right? Depending on what you set out your financial goals to be, if it is for long-term wealth creation, which I assume is what we want with the majority of our equity money, I think one should definitely stay the course, because Dr. But one good day in the markets can be sometimes a 4, 5, 6% move on the index. That is 2-3% CAGR over 2-3 years. That's very hard to compensate for any fund manager, no matter how good they are, right? So definitely stay the course. Now, let's say you are in a scenario where you were able to take money off the table at the right time. Let's say you took it off in October 21, right? When the markets, I think for the first time crossed 18,000 odd, the Nifty crossed 18,000 odd. If that is the case, then I think you should use heuristics and try and figure out when to get back in, right? So with your permission, I would just like to share a small data point that I had brought along today for this topic.
Please, please.
So if you can see my screen right now, it's actually very easy to distinguish what are the price corrections and what are the time corrections, right? The corrections here are defined by the number of months the market has spent in that downward move or the sideways move. So basically the number of months the market has not come back and made a new high, right? So the shorter bars that we see are all price corrections, right? So in 2004, and that ended with Congress coming back into power. So Vajpayee ji lost the elections, Congress came into power in 2004. And you saw this 10% lower circuit the day Congress got voted into power. And that marked sort of the end of the price correction. From there on, the market gathered steam, and we all know what happened in 2004 to 7 rally. Very recently when we had the NBFC crisis happen, we had a couple of months of very steep fall in the markets, which lasted for 2 months. but that's when the whole DHFL and ILNFS crisis happened. Then we had a couple of months of very steep price correction at the start of COVID. But the longer bars you see is where we find ourselves today. These are essentially a time correction period. So this is post in 2000, it is post the dot-com bubble crashing, but before really seeing a rally coming in. So it went from dot-com bubble crashing to about 9/11. So that was a couple of years of very boring markets. Again, post the crash that we saw in GFC, there were two instances of time correction that we saw. One in late 2010 and another in 2015, right? We had the great rally when Mr. Modi got elected to become the Prime Minister of India. And then we had this sideways move. What is very evident is 12 to 18 months seems to be the time frame in which these time corrections also end, right? And think about it. In a world where so much is happening, you can't really not have any news for more than 12 to 18 months. I mean, it's imperative, like something has to happen, something either has to break down or really make a leap forward. So what I would say is use this as a benchmark. If you're 12 months into the time correction, I think it's time for you to start deploying money. If you're 18 months into time correction, I think it's time for you to really consider deploying money back into the markets, because we can't really live without any positive or negative news for such a long period of time. Human race, we're not status quo people. We're not a status quo race. We are either moving forward or getting destroyed in the process. But we will always make an attempt, right? So I think this is a great heuristic to use for what to do now. If you are an investor. So if you're invested, stay the course. If you have managed to take something off, I think we are 18 months into a time correction. I think this is the time for you to come back into the markets. So that is how I would play it at this point of time.
Harini, when I talk to you, all these things looks very logical to me. That means the prices will go through the roof. There is a formula there. You can identify when the markets are going to heat up. You have the numbers to support your data. You have the science which can tell you what is going to happen. And when the bull market is raging, nobody listens to you. When the markets are down and crashing, again, nobody listens to you. This is the reality of the market. But all these things are known. It's not that the first time I'm hearing. Warren Buffett said that when everybody is interested in the stock market, that's the time you walk out of it. And he also goes on to say that if nobody is interested, that is the time you press the accelerator and come big time into the stock markets. These are known. And this is not a secret. It's there everywhere. It is spoken everywhere. But why still the cycles happen? Is it that we are so naive that we can't understand these cycles? Can we not think in a rational way? Why the cycles happen? And in these cycles, who wins?
This is something that's always baffled me. And yet when I find myself sitting through a steep price correction in a particular position that I hold, or even a time correction, I see these emotions play out in me as well. And I have to sort of wrestle with my own inner demon, so to speak, right? And this is precisely where we started our conversation, that how do we really identify corrections? It's with either the anxious feeling or the feeling of boredom or the feeling of greed. That is how we are defining what phase of the market we are in. And that is why I think collectively we say, right, that markets can remain insane and solvent and mad for longer than you can remain solvent for in the markets, right? Because it's again an aggregation of human emotion and human beings. What really makes us human is our emotion itself, right? If everybody was using logic and rationality, I think we would have a perfectly efficient and perfectly priced market at every given point of time. The challenge really is that our rationality is always governed by our emotions. And that sort of will always create these opportunities for investors in the market. So, Dr. Bhatt, I strongly believe that my or anybody's intellect is not the great asset that we should desire if we want to really succeed in investing. It's being practical, being extremely disciplined. I think that is something that we should really look out for when we're trying to become better investors, because that is the only way we can gain a control over our emotions. We can ensure that emotions don't sort of reign over rationality. But at the end of the day, we are human beings. When Thalaiva's movie comes out, we cheer and we hoot, and we know it is impractical. We know the kind of scenes being shot, this doesn't happen in real life, but we like it, we enjoy, we thrive in it. Somewhere deep down, if we all asked ourselves questions, did we really think that the rally of 2021, the crazy up moves in some of the stocks, was it really justified? Was it really justified to see the kind of 4, 5x, 6x returns that some of these stocks saw? And we know the answer is no, it wasn't. But when it's happening, it puts a smile on your face, strut in your stride, so to speak. So it's the same feeling that we get when we see, when I see Shah Rukh Khan, or when you probably see Thalaiva on the screen. It's that same kind of high that we get. And at that point of time, our rationality sort of takes a back seat. And I think as long as we humans have this enduring quality of being emotional beings, corrections will happen, even though all the data is known to everybody. I have not presented any data or any knowledge that is not known to everybody. The one who's disciplined and practical, who can act despite their emotions, wins.
It's the only place probably where the average person has a far better chance of succeeding in the stock market than the most intelligent person. Because if you are intelligent, you try to beat somebody else, and that's not possible. So that's why it's rightly said, time in the market is more important than the time in the market. Recently, I had done one video also called 2 Years Gone. Is it a time to change your financial planner? Returns are not coming. Investors have to realize one thing: markets in any part of the world will richly reward those patient investors. Yes, price corrections have happened. We are passing through a time correction, consolidation, boredom, no excitement. Nobody is talking about. The portfolios look very flattish. But when the news comes, the market will go through a spike up phase. And there are people who think when that happens, I'll invest. But they will be overpowered at that point of time. Post the time correction, the spike that will come will be a massive spike. Markets are oversold, and even the slightest additional buying that comes into the market will create a huge spike. Two things will happen. People who are standing on the sidelines will think, let me wait, let the markets correct. Keep on waiting. Market day after day keeps climbing up, and that correction would never ever come. And if you have missed this spike, the most juiciest part of the stock market, make no mistake, the stock market returns what everybody talks will never reflect in your portfolio. If you really want to get what stock market has to give to you, take cues from what Harini has said. Stay the course, keep investing. Today probably is the best time where I can say all of us can't time the market, but if there is a possibility that we can say today is a better time, it is now, these months. Maybe markets will make you wait for a few months, at the most maybe 1 year's time. A spike up phase of the market is going to come, and it will reward those who gets onboarded. Think about, if you want to catch a Rajdhani Express, do you want to catch it when it is moving at full speed or when it is standing in the railway station? Today, the same Rajdhani Express is standing in the station, safely onboarded, wait for the train to get started, then it is going to be a speeding train. It is the rational thinking that you should open up your purse now. If you have an intention to rake money out of the stock market, this is the time you should enter. Thank you, Harini, for all that information that you have given. I've called you because I've told all these things to the participants of the market. But validation happens. A learned person like you, an ace fund manager like you, comes and talks to my audience. I also know how you have designed that view portfolio under your PMS, where there is no scope for emotions at all. You describe what needs to be done, how the stocks have to be picked up, then complete automation takes over. Congratulations, Chrysil and the PMS have recognized a great performance of your funds, and they have given you the star rating. I wish you all the best in your journey. I have no doubt that you are a budding and the future fund manager of India in the making. Dear viewers, if any of you have any interest in the funds managed by Harini Dedia, if you want to know more about it, you can send us a message through a WhatsApp, a message on the number that is shown here on the screen, or just go to the description box. We have given a link there. Click on the link. It will open up your WhatsApp chat. and you can send a message, and then I'll pass on your interest to Team Harini and Team Tamora. And from there, they will take over and do the risk profiling and other regulatory requirements, whatever is there, in case if you have interest to participate in the funds managed by them. Thank you very much, Harini, for your time. Look forward to next interaction with you as early as possible. Thank you very much.
Thank you so much, Dr. Bhatt. And if I can just say one thing, I think your example of the Rajdhani train was outstanding and very nostalgic as well for me. So great analogy, and thank you so much for having me on your show again.
Only thing is I have to update my Rajdhani Express to Vande Bharat Express probably today.
Yeah, possibly. Correct.
All right. Dear viewers, hope you understood through this video what's really happening in the market, what is time correction, what is price correction, where is the opportunity, what you can do and what you cannot do, and the formula for you to rake profits the stock market gives from time to time. If it did give you an idea, do like this video, do share this video with your friends and relatives and everyone around you. Thank you very much for watching this episode. If you are a person who hasn't subscribed for my channel till now, we bring you value videos like this week after week. Do consider subscribing to the channel. Hit that subscribe button now and press the bell icon. Whenever I release the video, you will be notified. Thank you very much. And I will be back with you next Tuesday with yet another expert with yet another useful topic. Till then, stay safe.
Press the bell icon for more details and subscribe our channel.